Hello everyone, my name is Sunny and you're watching my YouTube channel Trade with Sunny. Today I'm gonna talk about dollar index. So last month in February I analyzed this chart and that was my first YouTube video over here. If you have not watched it already, you can have a look at it and see how the markets unfolded on the charts what I analyzed last month. So I'm just gonna give you a quick review of what I told over there because maybe most of you have not seen it and you are new to my channel or anything like that. So for you guys, I'm gonna tell you that I analyzed over there that this gap it was not filled by then, and this got filled in February and that was not filled by then, and I told you guys this market by the start of the month this will go up to the mean threshold of this fair value gap, which is the low of this candle to the high of this candle. Okay, it's 105,300 to 104,278. So its mean threshold was here, which it just clicked and fell down, which I'm gonna show you now on lower time frame, daily, and then on H4 and H1 respectively. So let's go on. Let me first put some chart markings which have already been drawn here for more than 2-3 months now, and my last analysis was on these horizontal lines showing up here, so they are gonna make more sense when I am going to draw on smaller time frame charts. So this was the gap highlighted by these two red lines, which was the gap I identified, and this black line shows the mean threshold of this gap. So if we see on weekly time frame, we see that this went up to the mean threshold, tapped this order block's wick and fell back down and closed below this fair value gap. Look at this closed below the fair value gap. This is a weekly time frame chart, and the weekly candle went with a strong volume to the mean threshold and got rejected and closed below this gap, which was the which was the entry for us to sell, and which could have been a bullish scenario for us if it would have closed the weekly or monthly candle above this mean threshold or the equilibrium point of this zone. So it didn't do that and it started falling, and which gave us a nice entry. And here we go on daily chart. So this, when it got rejected from the mean threshold, it has given us this little real gap, which was on Wednesday to Thursday's next candle. Let me mark this one for you as well and see how markets reacted on this point. Yeah, so here it is, and if we see that it has given us a nice bearish candle here on Thursday, and on Friday it just went up, covered this all volume, and took the liquidity above this close, above this open, and tapped this fair value gap, and then got rejected from there, which was the perfect case scenario for a bearish entry. Then again, when it fell down below to this order block, that I also indicated it's gonna get rejected from this order block, which it has done over here, and went up again to the monthly BC or fair value gap, and it gave us a nice rejection candle here again and started moving lower. And one thing, this gap, I will identify it for you in a minute on lower time frame. This is a H1 gap, so keep it in mind. I'm gonna highlight is this one in purple. So if we see what it has done here, it came down to take this liquidity, then took out this order block. Because if we see that this bearish candle, which was absolutely showing us that it's willing to go below these lows, because if you see this candle got closed below this gap, which took a swing low, and the next candle gave us a gap and just filled the gap and started moving lower. So moving lower to where, let me show you this gap. This was a real gap which was left behind on 16th of January, and which had to be filled, which was not even tapped a single time. So this market candle came here into this order block rejection area and came into the mean threshold of this point. So if we see what the markets have done, that just in these two zones, which is one is marked here with as monthly order block or rejection block, and one is here as monthly fair value gap. The red lines I'm talking about, and here I'm talking about the blue lines. So if we see that what market has done, it's quite very simple, that it has gone up to this equilibrium position of higher time frame area and then started moving lower to the equilibrium of this order block, which was also a marked zone on monthly time frame. So it got rejected. It went down here, tapped the equilibrium, went back up, closed above the real gap, then came again, tapped the mean threshold of this real gap, then then went back up, made a swing high. If you see here with these three candles, maybe you think these three candles are just noise, and but they are not. They are making a swing high over here, and this candle is taking that swing high here. Okay, which makes a market. This is a daily chart, and which shows us a market structure shift on daily time frame, and without giving us the opportunity again here, this was the gap. I would mark this one as well. So without giving us a at uh, entry at this candle or this candle or this candle, this started moving higher. And what was it doing actually, I will show you again this purple area later. So it got rejected again from there and came back to this order block, sorry, fair value gap, just fell a little bit short of the tapping the mean threshold, but it was actually tapping the higher time frame area, which was this monthly order block or rejection block. I will take this off for now, but this was also a nice place to buy it. Even if we didn't have these higher time frame areas marked already, we could still have bought this on daily time frame. So what we see that when it came back to this value gap after taking this high, which showed a market structure shift, so we didn't have any entry at any of these four candles, but this candle was the entry for us right at this point, which is 103.297 or maybe 300, and which whose lower end was this. We could have waited for the mean threshold as well. If we would have done that, we may have missed the entry, and that's absolutely fine to miss the entry. That's not a big deal. So if we see that after this market structure shift, this has given us the entry here after 5 days, and look at the reaction, how strong it is, and Where is it going now? It's going to this. It already has closed inside this monthly fair value gap, so it means it's gonna go higher, at least to this red marked new day opening gap. If you see it, I will extend it for you. Here it is. So until and unless a solid candle closed across it, this gap still matters to me. This doesn't mean that this wick has filled this gap and this gap has gone now and is of no use anymore. Until and unless a candle is closed, passing through this and closed above it and then coming back again or stuff like that, just like I would say this gap, this got covered by this candle here. So just like that, until and unless this covers or passes through and closes through this zone, this gap still matters to me. So for now, I would say that this market is going into this gap. So it could get rejected from here a little bit and keeps going higher. That depends if we look at how we look at on higher time frame charts that I've just discussed, that if it doesn't close weekly or monthly candles above the mean threshold, then we are still bearish. But what I think that the way it has started uh, going up, I believe it's bullish for now, and this time it will go and cross this high, and may go higher until it closes the current month, which is just we have just got 1 week and of March, which if it closes above the mean threshold, then we are bullish. And if it doesn't do that and started getting rejected from this zone, which is highlighted by red, which is the new day opening gap, that could also push it back lower. But if it gets through it, I'm bullish on it, and in that bullishness, this order block is gonna play a really an important role. Okay, the candle of 24 March, it was Wednesday, which is going to be responsible for sending it higher and maybe coming back, and again the markets would react strongly, show a strong reaction from this point. Now I would take your attention to that purple shaded area, which was a H1 fair value gap. So it is here. Yeah, here, this gap I'm talking about. And if you see, this was my trade to get entered after this got rejected from monthly BC and came back down, took these lows and made liquidity and yeah, almost like sort of equal lows down here, and then then started going up. uh, when the market was here, I wanted it to go up into this gap and then started going lower, but it already, when the markets opened on Monday, they already started going down, just made a little bit consolidation here, then took this high as well and started breaking lower. And when it started breaking lower here, it showed us this gap, which was my entry point. And look at the time of the day, it was uh, it was 8 o'clock, which is no our entry. But let me show you, we had an entry here, which maybe I'll have to move on to lower time frame. Yeah, sorry. Yeah, so look at the time of the day, it's 8 o'clock. Let me mark the New York open, that is 8:30 a.m., from which our day starts. Yeah, after this vertical line. So if we see what it has done, it started going down, made a swing low here at 9:15, and gave us the entry here at 9:45. That was my entry. I entered on my live account. From this gap, it went up higher to this, fill this gap, and the stops were here. Okay, and this candle was what I anticipating, and that has just shown a really nice move. Then what happened? It went back up and started falling again at 21. That's 9 o'clock in the evening, and that's not our trading time. So I did not touch that, but it did moved lower to the monthly order block. The lower PD array we already have marked on higher time frame. So what it shows us here is a nice 3 a.m. entry, which is the London silver bullet, and that was also a perfect entry. Whoever trades the silver bullet concepts. Then if we see, we again had this entry at half 8, and which also pushed it lower, and then this is not our entry. And let me show you, I don't trade PM sessions also, for even from New York, because uh, it just not suits me. And if we see here, it started breaking lower, closed below this, went back up, took this liquidity, made a turtle soup, and that was a selling entry here at 9 o'clock, half 8, 8:45, 9 o'clock. Those all were entries, and then it started breaking lower uh, to the gap, which is this blue one. There was a new day opening gap, which it got filled here, and started going again up. Here we see it's making a market maker buy model. Okay, this is a market maker buy model. Okay, let me highlight. Yeah, this is the market maker buy model. If you see, it is making a U-like shape. Okay, and this U-like shape, when it's aligned with your trend analysis, higher time frame analysis, and higher time frame PD arrays, when it's aligned with that, this market maker buy model, you can see for the markets to come back into this original consolidation. Okay, which is here. Whenever it happens, wait for the when ended breakouts, the original consolidation, which was here, and it comes back onto it, we are gonna buy it. Okay, that's our perfect entry. And if we see here, it made the market maker buy model, then it came back down to original consolidation, also aligned with this what we call it, new day opening gap, and it came exactly at its mean threshold. That was New York lunchtime. That was no our entry though. So we wait for the PM session silver bullet, and that was also not our entry. And later the other day, it's the market stayed here. Look at this, the markets, as this was not our time to buy the markets, and as I already told you, we wait for the New York AM session, and this was not our time to get into the markets. So what did the market do? It started consolidating here and waiting for the people to accumulate the orders, and she's just accumulating the orders around here and waiting for the New York open to send the rocket higher. So if we see, all this time what it was doing, it was waiting for 8:30, and at 8:30 it made this 15-minute order block, which started sending the markets higher. And then at this candle it came back to the this order block, which was our responsible candle for sending the markets higher, and which was this time was 9:15 a.m., the perfect time, and started moving higher to the upper PD array we have marked. And where is it reaching now? Look at this. The H1 order block, the H1 fair value gap, which I was telling you that I was waiting for this purple zone H1 fair value gap, but it got missed. That was later got tapped again, and here one time here got rejected because there was no trade time. That was 5 a.m. Then it what is done here, then that's the London session. That's not our time as well. And it started dropping here, and so as that was not the time of the day which we need to get entered into the markets, so we are not gonna trade this move. Okay, it's completely okay to miss the moves. That's not a compulsory thing to get or make profits on every move of the markets, because that's bullshit. No one can do that. No one can trade every move the market makes. So just let it be however it works. So, but if we see here on Wednesday again, we saw a 3 a.m. entry here, which was London session, silver bullet, and we see that it has given us a nice opportunity here, coming at this mm, higher time frame rejection block, monthly rejection block, and went back up, came back again at 6 o'clock, sent in market higher 8, 9, 10. So we do have some entries in here on M5, MM15 charts. So I will leave that for you to study, and now see that what we could have done after rejecting here, rejection from here with a strong displacement. We definitely gonna anticipate a bullish move. And if we see here, that is also not our entry. Even if it looks even if it catches my eye, but that's not my entry. I'm not gonna enter it even if it looks like a show shot. So so how we become a trader is that we stay strict with our rules. Whatever the rules we have got, we need to stay strict with them. We have to abide them. And even if you trade just support and resistance and trend lines and stuff, just the retail stuff, even if you just trade them, and you don't know about any PD array, any order block, any breaker, but you have got a fixed risk, and you are abiding by your rules, then you are gonna be profitable. Mark my words. If you just abide by your rules, you are gonna be profitable. So this is the phrase I'm gonna end my video with, and hopefully you would have seen some insightful, some helpful information in this video. And if you do like this video, please do like and subscribe, and give me any comments you want to